So to my left, I have Paolo Ardoino. He's the CEO of Tether, that is the largest stablecoin issuer, and he's the CTO of Bitfinex. You've probably heard of Tether at this point. If you're not, you're probably in the wrong room. After Paolo, we have Guy. Guy is the founder and CEO of Ethena Labs. They are a decentralized stablecoin that is powered by ETH staking and derivatives. And then finally, we have my favorite crypto investor over there. We have Rob Hadick. He's a general partner at Dragonfly, that is the second best crypto fund, and a former Goldman Sachs and Golden Tree investor. So Rob, Paolo, Guy, thank you for coming.
Thank you for having us.
Yeah, so first, let's talk about this. You have said a statement, Paolo, which I think is really interesting, which is fiat currencies are meme coins with extra steps. So let's cover this first.
Well, the problem with fiat currencies is that they are made by humans, right? So every few years, humans change in the central banks, and they take different decisions. And as meme coins, they are very unpredictable.
Okay, there we have it. It's a spicy take to start the panel with. Hopefully, we'll have many more here that are quotable, that you ccan quote and attribute to us. This is not Chatham's House rules. This is the exact opposite. I think you get extra credit for tweeting out everything that we say. So let me start with stablecoins. I think one of the things that is the most interesting to note about stablecoins is that there's been, I think it's fair to say, two major disruptions in the last 50 years in the payments systems. One of them was the card networks, of course, the Visas, the MasterCards that transformed consumer payments. The second one was really the rise of these fintechs, these add-ins, PayPals, Square, Stripes. And stablecoins really are now positioned to be this third major shift. So they're making global payments instant and programmable. So that's extremely exciting. That is the summary. That is the context that brings us here today. Stablecoins are no longer a crypto thing. So I'm going to start with the state of stablecoin adoptions and where are we now. So Paolo, let's go to you again. Big surge of issuance over the past 12 months in volumes. I want to ask you explicitly where we're seeing real-world uptake instead of just trading volumes, which is how obviously stablecoins started. And then maybe if you can distinguish a little bit between what's the use case for B2B and what's the use case for B2C.
Right, so when Tether was born in 2014, of course, the main use case was cryptocurrency trading. From 2014 to 2020, that is when 100% of the usage of stablecoins, and mainly USDT, was for cryptocurrency trading, settlement, and so on. In 2020, something happened. That was the pandemic. And so something very interesting happened. So in the emerging markets, the developing countries, those are the countries where you have the lowest average age. So having the lowest average age, you find the kids that were from 2017 to 2020 very interested in the cryptocurrency market. In 2020, the pandemic hit, and the jobs started to fail. You had national currencies that started to devaluate faster against the US dollar, like the Turkish lira, the Argentinian peso, and so on. So you had kids at home looking at the parents going out in the streets with COVID, trying to buy cash bills, cash dollars. And so it's actually for the first time the kids were looking at the parents, asking the parents, why the hell you are going out, putting yourself at risk, and to buy dollars? I have dollars on my smartphone. They're digital. I can send it to my friends in a second. And that is actually how it bootstrapped the usage of USDT across hundreds of millions of people. It's a word of mouth. It's kids teaching to their parents. As of today, we have around 37% of the users of USDT using USDT as savings. Right, so those are all the unbanked people that don't have access to nice savings accounts that gives them yield, like buying treasuries themselves, and so on. Right, so 37% is already savings. Then you have another 30% today that is payments and cross-border payments, remittances, you name it. And then the rest is still related to cryptocurrency trading.
And so that's the consumer side of stablecoins. Real quick, on the institutional side, what is kind of like the clear advantage?
I think that the next leg up for USDT to get from 148 billion today to 1 trillion will be trade finance. What we're seeing is a huge adoption of USDT in trade finance for commodity trading, buying and selling goods from from Asia to Central South America. We are seeing that growing. Tether invested recently into this company called Hadick that is a publicly listed company in the US. They are producing rice and milk and bioethanol and all that, and they're actually starting to look into how USDT can be used as a payment system internationally. But we ourselves have put a lot of capital to support the usage of USDT for cross-border payments, also when it comes to commodities trading. We announced in October 2024 the huge deal for $45 million for oil trading with Middle East. And that is just going to grow. It's bringing additional institutional adoption. We have been talking to the biggest commodity traders in the world, and they have the problem of sending a wire takes sometimes from 5 days to 2 weeks. And imagine having a ship waiting to load barrels of oil, but cannot load barrels of oil until the payments is done. With stablecoins, you get the payment done in 20 seconds, right? So that is a huge value proposition. It will optimize the commodity trading jobs, will make additional yield and returns for the commodity trading firms. So that is a game changer.
So let's jump to Guy. Guy, you are the founder of a decentralized stablecoin. I'm very curious about, are they serving different market than centralized stablecoins? And are there particular use cases in which a centralized stablecoin isn't a perfect substitute of a decentralized one?
Yeah, I think there's some crossover in usage, but then also very distinct user bases who are finding Ethena's product useful versus a Tether. I think the 4 broad categories that we think about use cases at the moment are trading collateral on centralized exchanges, savings products that sit within DeFi, payments, and then broad usage for remittances as well. I think the use case that we found Ethena has actually had the most pickup is actually thinking about trading collateral across DeFi and CeFi. So basically being able to use your collateral while it's earning a yield in some format is actually pretty useful in some contexts for trading firms. And then when you're using it in DeFi, obviously being able to securitize the yields, slice and dice it in different ways is a useful product within those financial applications. So I do think it's a slightly different user base where I think, Paolo found the most success originally in developing countries, savings technology for those groups of individuals. I think ours is for slightly more sophisticated financial user base. Yeah.
So is USD a competitor to Tether? What are you? Are you enemies? Are you frenemies? Are you friends?
No, it's actually quite the opposite, and I put out a tweet around this last week. So I think one thing that people don't realize about Ethena and Tether is that actually Ethena is actually quite helpful to the growth of Tether in general. So because most of the perpetual swap market is denominated in Tether, for every short that Ethena puts into the market, there needs to be a long of Tether that sits on the other side. So the growth of Ethena actually, you can think about it as a $1 increase in USDE actually creates around 70 cents of increase in Tether on the other side. So it's a pretty beneficial, I think, growth on both sides in terms of how we benefit one another. And I think during periods in the last year, Ethena is probably a top 5 holder of Tether within the world. So definitely not competitors. I find different use cases, different user bases, and then I think the growth sort of benefits each other. Yeah.
So what you're saying is that Ethena is pumping USDT's bags, and so it's...
in some senses, yes.
Thank you. Good. That's good. That's another quotable moment right there. Rob, let's go to you. So we have issuers, we have the routers, we have messaging layers, we have basically everything. We have stablecoin-specific L1s. What is missing? Why is this so small?
I mean, it really depends on what use case we're talking about, right? And so Paolo earlier talked about, okay, well, I think you said 37% of people are using USDT for savings, right? If people are going to keep that USDT and that's going to grow as part of their savings, they also need usability, right? So we're talking about there's now card issuance that exists in the space. Okay, well maybe I can pay a bill or I can do something like that. That's at the early stages, but that's starting to pick up a little bit. But when we talk about, okay, well what is the really big market? It's cross-border B2B primarily. Cross-border payments market, it's a $200 trillion a year volume market. Like that is, I think, what people are really playing for, in my mind. I don't know, Paolo might disagree and others. But that's where you say, okay, well, we're taking over the banks, because that's a place where the banks haven't really done a good job, and they've kind of underserved trade finance and others. And what do I need to do more volume in that space? Well, I need better, I need things like better reconciliation. I need better compliance. I need fraud. I need to be able to understand if I have I can't necessarily have atomic settlement. I need to be able to have a period of time where I can have a chargeback or something like that. I need to be able to understand if the shipment is actually going to reach me and is there going to be escrow, et cetera. And there's not really the right setup yet in most cases for there to be, for businesses and the people who sit on the side of those businesses, the PSPs, the banks, et cetera, to feel comfortable doing lots of volume in stablecoins at that cross-border. That's starting to pick up, but it's early days.
So coming back to you, Paolo, one thing that I'm super curious about is I'm running the country of Angola. And instead of Kwanzaa, what's happening is my citizens are now using stablecoins on these self-custodial wallets, and the economy is actually starting to move in stablecoins. So the question is there a ceiling to stablecoin issuance and adoption? And another related one is, when do regulators push back?
Well, this is a very good question, right? So I will not disclose the name of the Minister of Finance, but 1 year ago I was working in the office of a Minister of Finance, and I was afraid that he was going to ask me, well, why my people are converting my national currency into USDT. So I thought it was going to be an adversarial conversation, but the reality is that one side you can expect people moving from the national currency of a country to, for example, USDT. On the other side, though, USDT is enabling so much more remittances in this moment that is actually balancing that out and actually is helping the economy to drive faster, right? So that is a game changer. We had examples with certain countries that got more than 7 billion in a year of volume in terms of remittances coming from, for example, US and Europe into that country. And given the fact that for the average emerging market, 20% of the GDP is remittances, up to 80% in certain cases, but on average 20% of the GDP of a country is remittances. The fact that you are optimizing the flow of remittances, reducing by 10% the cost of moving funds, right? So we know MoneyGram and others are charging from 6 to 20% in fees to move money globally. If you remove all that, you are leaving money in the pockets of the hard workers that are working abroad from their families, and every month they are sending money back home. So that is a huge feature that stablecoins and USDT are enabling for these countries. That's why we are not seeing pushback. Actually, we are seeing excitement. We are seeing adoption and embracement from the country itself. So also they know that the majority of the goods that they are importing from foreign countries is still traded in US dollars. So we are making their ability to import goods much better on international level. So I think with proper education, these issues are being solved, and so hence I don't think there is any ceiling in the adoption of stablecoins and the growth of stablecoins in the next few years.
So, Guy, Tether is essentially a very narrow bank where every IOU that is issued on chain has a backing of either a T-bill, a treasury, or an actual dollar in a bank account. However, USD is something very different. It is a way weirder form of stablecoin. One of the things that we've talked about was that institutional adoption is one of the things that's going to drive us forward. So are institutions comfortable with holding stablecoin whose stability comes from ETH staking, the basis trades, and delta neutral strategies? How do you think about institutional adoption for USD and Ethena?
Yeah, I think it's just presented slightly differently rather than something that's used for payments or like the normal way that people would think about stablecoins. I think USD as a product is something of a weird blend between a structured product or investment vehicle and the stablecoin, kind of all blended into one. And I think the presentation to TradFi or those pools of capital is that there's just an interesting risk-adjusted return that you can capture within the basis within crypto markets. So in 2024, you roughly annualized around 18% for the yield that was actually generated in the backing for USD. And so the presentation to them is more around, here's an interesting dollar-based return product that you can actually capture from crypto, rather than something that's actually presented as a stablecoin to them. And also the cash and carry, it's something that people have been doing in TradFi for the last 50 years. It's not something that's sort of like new or innovative from crypto. So they understand the risk profile, and I think when you present it as an investment, it's a very different way of looking at it.
Rob, you've invested in Ethena. So right now, there's nobody else in the room. It's just the two of us sitting side by side. My question to you is is Guy's project really decentralized? Is USD really decentralized? If they're holding all the collateral and all the perps on all these centralized exchanges, is this really a decentralized thing? It's just the two of us.
No, I mean, listen, the reality is there is still decentralized governance, right? And like that's what actually matters. Like an ability to affect the way that a protocol is going to run, right? And like you can go on to the forums today, you can go on and you can propose something and people can vote on it if you're a holder of Ethena. So that's what really matters. But I think if you maybe take a step back and not make it about Ethena, but you make it about like what happens in crypto more broadly, like there is this natural tension sometimes that we are continuing to see, and we're seeing it in a lot of these projects that call themselves stablecoins, between like, okay, well, am I going to offer like a novel new innovation, or am I going to, be completely decentralized? And a lot of us who got into the space a long time ago, was very ideological about what, decentralization is supposed to look like. As we've, innovated, as we've made it more mainstream, as we've brought more people into this market, like the reality is innovation wins. Being able to go and have real business development and be able to interface with customers, that wins. And if that is a problem for you, or you think that's not decentralized enough, well, your project is probably going to die because the consumers don't give a fuck.
That's funny. That's not how he usually talks to me when we're one-on-one. So, okay. One of the things that I think is very interesting right now is very rough model, but there's a pyramid of value capture right now in stablecoins. At the bottommost layer, with one of the best businesses of all time, sits Tether, an extremely profitable company that I'm extremely jealous of, and that's the bottom of the pyramid are the issuers. On top of that, we have these routers and these basically intermediaries that allow you to generate these wallets and send payments all around, and stablecoins. And then at the top, we have the money apps and the people that actually are building applications on top of this. Right now, it is a pyramid. But eventually, to me, it seems very natural that the pyramid has to invert. The value capture has to invert towards the applications at the top making the most money, then the people with value-added service providers and VASPs, and then at some point, the issuers can't be just rolling in cash and having just fantastic businesses. So let me start with you, Paolo. Is this how you see the world? Is the status quo possible to maintain for longer? Is the gravy train going to continue going forever?
Very good question. So what Tether is doing with the profits that we generated around $20 billion in the last 2.5 years in profits. Less than 5% were distributed to shareholders. The rest is actually being used to build the biggest distribution network that humanity ever seen. We are building, by 2030, hundreds of thousands of kiosks in Africa with solar panels on top and selling subscriptions for rechargeable batteries. We bought and we are in the progress of acquiring more bodegas chains in Central South America. So I agree with you that if you are a stablecoin and you are just hoping for the status quo, you have a bad luck. But for example, we invested in Rumble. We are investing we have a huge portfolio of companies that are doing things one crazier than the other that will allow us to continue to build in the most distributed, diverse point of view. Again, the biggest distribution network in the world. We have millions of physical touch points on Earth. If you go in many cities, you are going to see our logo. It's not necessarily us, we put it there, right? We have so many partners. The actual value proposition, and many people ask me, well, why Tether is not giving back the yield, right? So the point is, the answer is that you shouldn't look at stablecoins from the American perspective, right? So if you are a US person, you can have your bank account and you put your money in US treasuries yourself. You look at that or you think, what the hell, I should use that if it's not giving me the same returns of my T-bills. But put yourself in the shoes of a person living in a country where the intraday volatility over the national currency against the US dollar is more than 4%. That is the yield that you could give them on a yearly basis. Of course, the two things are not adding up, right? So what we are telling the people living in emerging markets where they have super high inflation, like 50% year over year in Turkey, is that we are taking that 4%, but we are using it to build infrastructure, to make the distribution networks much better, to give them more services, and to make the system much more resilient. A small company like Tether, because we have 150 people inside, was able to move the needle of financial inclusion at the rate of 420 million users as of today, in the emerging markets when NGOs and charities that got so much money over the last 50 years, they didn't move anything, they didn't do anything. When we go in the smallest villages in Africa or in Central South America, they are not there, we are there, and so we are changing the society in that way. And we can do it because we keep the yield, but we are not pocketing, we are not buying yachts for us, we are just reinvesting in good companies.
Even though you...
Thank you.
Yachts does sound nice, though. Let me just say that. Go ahead, guys.
I was going to add, I think a lot of people over-index on the success that they've seen of Tether as one of the best business models ever. But actually, all of the other stablecoins that exist and all the new ones that will come to market, I don't actually think are anywhere near the best business models that exist. They're actually pretty average business models. And the reason for that is that every marginal new entrant to the system only really has one axis that they can actually compete with Tether on, and that's sharing more of the yield with distribution partners on the other side. So I think, obviously, Tether captures a lot of value where they sit in that pyramid that you were describing. But if you look even at like the Circle financials that were coming out around the IPO or other new entrants that have come to the market, it's actually kind of distribution platforms or centralized exchanges which almost capture more of the economics of the products for everyone else except for Tether. So I think we have made a bit of a mistake sort of over-indexing on the success that they've had. Yeah. And it's not necessarily the case going forward that issuers outside of Tether actually capture much value.
Yeah. Maybe I'll push back a little bit because I think someone has to.
You love,
that's
you're
happening.
An investor. You love
crazy
trains.
Listen, I think the reality is like everything Paolo said is true, and that's been true to date. We're going to go from $230 billion to hopefully trillions of dollars of stablecoins outstanding. It's not going to be the same as it is now. It is going to change. And when you talk about the people that Paolo's talking about serving in Africa, like obviously they do not care about that 4%. When we're talking about serving the institutional use cases that 10x, 100x this market, they care about that extra BIP. When I go from 1 BIP to 2 BIPs, that's 100% difference. That's not just 1 BIP, right? And they're going to have a lot of heartache around sharing a bunch of economics or not getting a share of the economics if they're going to be using that stablecoin. And so we're seeing this conversation, in many, many parts of the world. I understand that that's not what the consumer in Africa cares about, but when I think about what does the future behold versus like what is happening right now, I think it is almost undoubtedly true that the vast majority of stablecoins and stablecoin issuers are going to have to share economics. My guess is that for USDT to hold the current market share that they have, which is astronomical, they're going to have to share economics because the rest of the market will grow without it. And so I think it's one thing to talk about where we are today, but it's another thing to think about, okay, well, like this market is going to get so much bigger, and how does that have to change? And stablecoins, the reality is in payments, there's an acquirer and there's an issuer. Now they're collapsing, right? And stablecoins allow you to do that. You can be the issuer or something, and then you can monetize as the acquirer or the person that helps the merchant accept, right? And Paolo was talking about this a little bit, like he builds this merchant network and he takes that 4%. Well, what's probably going to happen for most of these people is they're going to give the issuing economics away, and they're going to want to monetize the acquiring economics, which you're kind of doing the opposite, at least you talked about. But because that's what like the public markets care about in the US. That's how you get a higher multiple. That's what investors care about. And so there's kind of an incentive misalignment for the current model, and if we're going to grow into a more institutional, much larger model.
So let's continue on that thread. 3 to 5 years from now, who are the winners? Are the fintechs, the banks, the crypto natives, the current incumbents? Who wins in this market?
I think for the use cases that we're talking about, the banks are fucked, to be honest. Like, they already do not serve like cross-border use cases well. They already do not serve people in emerging markets well. The correspondent banking system is like a complete, it was good for what it was. It's a complete failure today. We're seeing the rise of alternative payment networks absolutely dominate and grow much quicker than the rest of the market. When you look at Wise, you look at these types of non-stablecoin payment networks. And so I expect that the fintechs and the crypto platforms will just be the same thing. Like, we will stop talking about a crypto platform and a fintech as a different thing because all of the fintechs will have stablecoins and they will all use them. And like that is coming much quicker than I think any of us realize. And so, we'll leave the banks behind and, good riddance.
In the back room, we were talking in confidence, just you and I, and you told me that you thought that Circle's newly announced Circle Payment Network was going to absolutely fail, I think was the actual
Those weren't my exact words.
So tell us why the CPN will fail.
I think the CPN is very ambitious, and I think there is a a world in which it works, which is that I go and I offer a value-added service that the top level. I offer software, I offer compliance, I offer reconciliation, fraud, et cetera. And then I bring everybody into that as a kind of a software platform. The problem you have right now with the way the current model looks, or any sort of API aggregator of ramps look, is that you end up competing with your end customers. And so the incentive is for their current partners, call it like a BVNK, is to not actually want to send their flow through the CPN, because now all of a sudden that flow is more expensive. They need to pass on that cost, and they're less competitive. And so they might use it for certain things, but the incentive over time is to bypass anything that eats into their economics, which kind of gets back to the point we were just talking about. It's all incentives. It's all economics, and these things are going to get whittled down as far as they can for what the competitive dynamics and what type of value that you offer.
And Paolo, I have this pet theory to myself that one of the things that has made stablecoins so unique and so attractive is if you were a fintech before stablecoins, you had to go to 150 countries, get the local regs, get the local integrations, do reconciliation, integrate with all the local players. And right now what we have is we've sort of inverted the model. By having the Schelling point being stablecoins, 150 countries are solving this problem for me, and the only thing that I have to integrate with is the stablecoin as the Schelling point, as the integration point. So following that train of thought, I sort of get to myself, maybe for the first time ever, we get to see the first truly global fintech. Do you see it this way? Because right now, Revolut is not truly global, PayPal is not truly global, these all have their dominant markets. Can we see the first truly global fintech built on Tether?
I think that is quite interesting. I have this theory where we talked a lot about globalization, but the world is going back towards localization, right? Each economy, at least in my opinion, is looking much more inwards rather than outwards. But money is the thing that will unify them all. And so that's why stablecoins are going to be very important to unify all these economies, although every country will start to protect more and more inwards. We start to see that with tariffs, right, in these days, right? So everyone is paying much more attention to exports and imports. They have now much more incentives to strengthen the local domestic markets and also looking at their neighbors rather than thinking that they can ship anywhere and they can, and everything will necessarily global by default. So I think we were going to go towards localization, but globalization when it comes to money. Also, global FX markets are going to be something very, very important. I think that, well, recently we also issued and we announced the first attestation of Tether Gold. That is our gold-backed stablecoin. I believe that that is going to be one of the key stablecoins for the future. That is very interesting because there is no way to make money out of it. So we created a product that, if extremely successful, could cannibalize the revenues of any dollar-based stablecoin, because basically there is no way to make money out of a pile of gold sitting in a vault. But we did it because it's the right thing to do. I want to have gold on chain. I want to have every single national currency be tokenized so that people can choose very quickly, they can move money, they can move value in a very transparent way. Of course, you can add ZK layers and have privacy on top of it. But it's very important that all the transaction of value will move on chain, but while allowing countries to look more at themselves and protect their markets, because that is going to be the future.
Okay, so I have two questions for a quick fire, and out of all of you, I'm going to start with Rob. I only want numbers, no justification for this. So the question is, it's 5 years from now. Rob, how many stablecoins do we have with over $1 billion of issuance, and how many do we have with over $10 billion of issuance?
I think, so there's 6 that have over $1 billion today,
6.
I believe, and 2 that have over $10 billion, if we don't include like BitL and like all these other things. My guess is that number is significantly higher. I would say 50 over $1 billion, and like call it, an order of magnitude that's similar, 10, that is over 10 billion.
Guy?
Pretty similar, I think around 20 to 30 over a bill, and then 10 over 10 bill.
Paolo?
I would have said 50 over 1 billion and around 20 over 10 billion and probably only 5 above 100 billion.
That's a lot of stablecoins. Okay, second question for all of you. Rob, it's 5 years from now. How many blockchains have over 1 billion of stables issued on them, and how about 10 billion?
All right, so same thing. There's 9, I believe, today. Maybe I think Ton is close and a couple others close, so maybe 11. I think that goes to like 30. There's not, like blockchains are just, there's going to be more of them. Like that's the incentives. Over 10, I think there's only 2 today, maybe more. I think probably 8 to 10 again.
Yeah, I think over 30 for $1 billion, and then 4 to 5 probably for 10. Yeah.
Pretty much the same numbers.
Gotcha. And how about stablecoins over 100 billion? Right now there's one. Are there going to be more than one in 5 years?
I mean, if JP Morgan would put 101 billion into a stablecoin, that would be very easy for them. The problem is the distribution network. The thing is that among our 420 million customers or users in emerging markets, I'm pretty sure that JP Morgan would not touch them with a 10-foot pole because they are too poor of being of their interest.
That is a spicy take. And with that, that's the end of our panel. Thank you, everyone. Let's thank the speakers.